Robschild, nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said millionaires don't need astrologers, but billionaires do. And so we begin. Not much um, economic data coming out today or tomorrow. Still, we're waiting for the PCE to be coming out on Thursday, which could really move markets. So there's a few interesting things going on today in markets. First of all, this is the S&P 500. Each candle represents one day. This is a daily chart. As you can see, these are Bollinger Bands or Bollinger Bands. I've heard people pronounce it differently, but as long as it's above this line here and we're bouncing up in this channel, that's considered to be fairly bullish, especially after such a long run. So this does look like it can keep going higher, and that can be also confirmed with looking at the VIX, also a daily chart. The VIX, we are breaking down this market. This is starting to look weaker. We have a trend line here, but we've hit it many times, and so, but after hitting it many times, we can see it break through, and so everything on that end is looking pretty bullish just overall for markets. This is XHB, the next chart. This is Home Builders ETF. We are now once again at all-time highs. Now this little candle here with a tail down to the bottom and to the top, and a very small candle here, it represents what's called a doji. And it's just to understand that the colored part of the candle here, the red, it represents the open was on the top and the close was on the bottom of this candle here. And during the day, it went all the way up to here and all the way down to here. So that's how candles work for anyone that doesn't really know. But this pattern, this could signify a potential top, especially when it's the highest it's ever been and you have that doji pattern. So we'll see what happens there. I wouldn't want to be long right here short term, personally. Yesterday I mentioned HYT, basically the risky smart money, which prices how risky bankruptcies are. I had mentioned that this had looked like a consolidation for a week, and it looked like it was breaking down, and we popped right back into the same range, which means it was a fake out, not a breakout. And so everything right now is saying that the markets are looking fairly strong. Small oddity I found today in the CME Fed Watch tool. One of the other things I like to check every day is looking at the September and the November of 2024. For whatever reason, the market is seeing a hiking here. We see easing, and then a hike, and then further easing. I'm not sure if someone pressed the wrong button or someone is seeing something in their crystal ball happening at that specific time of the year. I mean, we know seasonally that October can be a very frothy month, and so maybe we're expecting the need to decline into October and then coming out of it so strong that they need to hike again. I don't really see what's going on there. Anyway, on the day, one of the things I like to just take a quick glance at is the Yahoo stock top gainers for the day. Just give a brief look at it, and wowie, wowie, wow. This is not normal to see this many companies jumping over 10% in one day. Many of them between the 10 and 40 range, and a few outliers here at the top, which is can always happen, but this is abnormal in markets. When I look into my crystal ball and try to interpret that data, what I see here is money that has been waiting on the sidelines for any decent news on smaller and riskier companies is coming in now. And and so that makes me want to be like, okay, well, what's going on like with the Russell, with the small caps? And if we check the small caps, the Russell up 1.34%. That's not a monumental move, but it's a pretty good move. That gainers list just makes me start to think that, like, okay, I mean, this is obviously a lot of companies. A lot of times, those kinds of jumps are from earnings reports, or reports that are giving information that's better than expected, and so it almost makes me think that, like, okay, that's the mode we're in. Investors are looking at any little good news as being a reason to dump their money into more risky assets. And, we're definitely seeing that in Bitcoin, where we just recently saw Bitcoin rally up. And so that's getting pretty interesting. And as I had said in previous shows, it's starting to get dangerous up there. We're climbing higher and higher up this mountain. We don't know where the cliff is, but like I said in previous shows as well, it's coming. I can see it. It's coming. Last chart I wanted to bring up today, EWZ. I've been excited about this particular market for a long time, and we had another big breakout, and so we have a pattern now of higher high, higher low, another higher high. So this is a bullish pattern, and this whole section right here, if I draw this whole section right here, represents a breakout from a trend line that had been around since around 2010. You could even argue before then. But if we just take the line right here, this is the line I'm talking about. We hit 1, 2, 3, 4, 5, 6 times. 7th time we break through, we retest, and now we're breaking higher. This looks like an extremely, from a chartist perspective, which I think it is important to use a little bit of charting at the very least to get some kind of sense as to what could be going on. Many chart pattern types play out like clockwork. They don't always, but they can help your underlying reasons and thesis for being in or out of something. The last part of this I wanted to mention, I keep talking about the S&P 500 as being kind of at a potential peak at any moment right now, and yet here I am looking at the EWZ represented down here as being in a potential breakout to go higher and higher. And so the question is that I have to ask myself, well, if the S&P 500 is cracking and crashing, what's that going to do for Brazilian stocks? Typically, when the tide comes in, it lifts all ships, and same when it goes out, it lowers all ships. But I want to just point out some interesting divergences from these two charts. The blue line here represents the S&P 500, and am I in drawing mode? Yes, I am. You can see this run. This is from before 2021. The run in the S&P 500 going straight up, as well as the EWZ. Still, higher high, higher low. This is a clearly bullish pattern. But all of a sudden, from this point here, the S&P 500 rallying higher, and this thing crashing down lower. And then we have the opposite right after. We have the S&P 500 going for a bit of a breakdown while this was at a bottom, and made a very nice run here. So and then again here, let's do one more. So S&P 500 going up at the same time as the EWZ sort of going down, and then S&P 500 going down, and this one, really going up through that period. So I'm not suggesting that EWZ is a perfect hedge to the S&P 500, but I think there are conditions where the EWZ can function as somewhat of a hedge to the S&P 500, especially when you just consider valuations, how the S&P 500 is a bit overvalued right now because of the weight and speculation in the value of the Magnificent Seven specifically, and then the long, undervaluing of the entire Brazilian equity market for so long. we could see a situation. I do think it's not unwise to be able to see in the crystal ball Brazil doing well while the S&P 500 goes through more of a bearish period. I'm thinking that is definitely a possibility. However, if we see a real complete crash in the S&P 500, that's one of those moments where everything goes down, and it takes no prisoners. And in that case, EWZ is not likely to hold up, but that's where I think things are. And that's all I have for you on today's show. Hope you enjoyed. Thank you very much for watching. Robschild.